Hello friends, the Reserve Bank of India has placed in public domain a draft scheme of amalgamation of the Punjab and Maharashtra Cooperative Bank or PMC Bank with Unity Small Finance Bank. In this video, we are going to discuss the important provisions of the draft scheme and also how it is going to affect the depositors of PMC Bank and its employees. PMC Bank has been under various restrictions by RBI since September 2019 after a mega scam involving senior officials of the bank came to light. The irregularities included hiding and misreporting of loans given to real estate developer HDIL. RBI had superseded the board of PMC Bank and placed it under regulatory restrictions including cap on withdrawals by its customers. The net worth of the bank had deteriorated steeply by the fraud. Initially, the depositors were permitted to withdraw a maximum of Rs 50,000 only, which was later enhanced to Rs 1 lakh. The depositors have been holding protests, meeting politicians, writing to various authorities in an effort to get their hard-earned money back. There are many senior citizen depositors whose life savings are stuck in the fraud-hit bank. Now, RBI has initiated steps for the bank to be taken over by Unity Small Finance Bank. Unity SFB is a newly formed bank promoted by Centrum Financial Services along with Resilient Innovation Private Limited. It was granted banking license in October 2021 and started functioning from November 1st. The draft scheme of amalgamation now issued by RBI envisages takeover of the assets and liabilities of PMC Bank including deposits by USFB. As per RBI, this will provide a greater degree of protection to the depositors. The only other option left with RBI was cancellation of the license and liquidation of PMC Bank. But the decision taken by RBI now for amalgamation of the bank with another bank should be bringing the much required relief to the long-suffering depositors of PMC Bank. How is the plan going to help the depositors of PMC Bank? Under the draft scheme, the depositors will get their full amount back over a period of 10 years. In the initial phase, the transferee bank will pay the amount received from DACGC to all the eligible depositors of the transferor bank. This amount would be equal to the deposit balance or Rs 5 lakh, whichever is less, as per the existing DACGC scheme. Later, at the end of 2 years, the bank will be paying up to Rs 50,000. It will be up to Rs 1 lakh at the end of 3 years, 3 lakhs at the end of 4 years and up to Rs 5.5 lakhs at the end of 5 years. Finally, the full amount will be paid after 10 years. RBI has also said that the interest on any of the interest-bearing deposits with the bank will not accrue after 31st March 2021. That is, no further interest will be payable on the interest-bearing deposits of the transferor bank, that is PMC Bank, for a period of 5 years after that. Interest at the rate of 2.75% will be paid on the amount of deposit remaining after 5 years. This is applicable for retail depositors of the bank. Now, regarding institutional investors, 80% of their uninsured deposits will be converted into perpetual non-cumulative preference shares of the transferee bank with dividend of 1% per annum payable annually. The remaining 20% will be converted into equity warrants of transferee bank at a price of Rupee 1 per warrant. These equity warrants will further be converted into equity shares of the transferee bank at the time of the initial public offer, that is IPO, when the transferee bank goes for public issue. Now what happens to the employees as per the draft plan? All the employees of PMC Bank shall continue in service on the same remuneration and terms and conditions of service for a period of 3 years as were applicable to them earlier. Regarding the key managerial personnel of PMC Bank, their service may be discontinued after following due procedure at any time. The term key managerial personnel refers to personnel like CEO and MD, Executive Director, CFO, Company Secretary, etc. So these are the important features of the draft scheme for amalgamation of PMC Bank with Unity Small Finance Bank. The draft has been placed in public domain. The Reserve Bank has invited suggestions and objections, if any, from members depositors and other creditors of transferor bank, that is PMC Bank, and transferee bank, that is Unity Small Finance Bank, on the draft scheme. This will be available till 5 p.m. on 10th December 2021. Anyway, let's hope that the amalgamation process, once implemented, will bring relief to the thousands of customers of PMC Bank who have been suffering for the last 2 years. Thank you.